Yeah, good morning. So, yeah, I don't think anybody's expecting BOJ to do anything massive, but I think probably the most interesting thing is what they're going to signal, particularly in terms of Treasury purchases going forwards of JGBs, and I think there's a sort of consensus that they are going to temper expectations for JGB buying going forwards. Look, this is going to create it's going to create short-term noise. We still think that yen at these levels is a huge buying opportunity. I know that's been a theme for a long time, but we've been saying it could take a long time to play out. It's looking incredibly attractive. We thought it was attractive at 145. We think it's even more attractive at 155. It's just that Japan is kind of it's sort of a backseat passenger in the Western world's impetus towards a sort of meltdown in late 24, early 25, and it's probably going to take that to happen before Japan starts to look relatively attractive. There's nothing particularly wrong with the Japanese economy. We've seen the performance of the economy and of equities over the last year or so, and they've held up reasonably well. Obviously the growth slowdowns happened, but the idea that there's any kind of an inflation scare because of the fact that there's this tiny bit of wage inflation now in Japan, that's seeing that as a negative is actually looking at it the wrong way in our view. We'd actually see that as an economic positive, but we still see Japan as being in a much better state than the West. So it's really those relative dynamics which could take a year or two or three to play out, because it's really about Western weakness that's going to make Japan look strong.
See, I'll be waiting to speak to you, Paul, and especially about the BOJ, if they can hurry up and deliver their decision as well. But are we sure they're a passenger? Right? They're sitting on so much USTs that are significantly underwater any which way that you dice it. If they do what they should do, which they know that they should do, and move on rates, and if that triggers a sell-off, as you would expect, if their rate profile goes higher on US Treasuries, that repatriation swinging in, people taking advantage of the high yields and all of the mess that could create. I'm not talking about even just carry trades, I'm just talking about the stability over there in Japan. I would argue that they're not necessarily a passenger. They're the driver in their own vehicle, and they've got a decision to make whether or not they're going to be focused on the domestic outcomes or whether they're going to be trying to maintain some kind of semblance of global stability, especially after what Yellen said. But isn't there a concern that if they don't do something, if they don't move, then they're locking in this deflation spectre for much longer than they actually believe, because so much of the cost push is coming in and it's not the right kind of demand pull?
No, look, that's absolutely right. But I mean, the BOJ as well as I do. And do you think there's anything that's going to make them proactively, take on that decision? I can't see it. I think they're just going to delay that for as long as possible. And that's why going forwards, we'd actually see yen and we'd see JGBs as being the play rather than seeing equities as being the play. Because I think, we're going to see the BOJ's inertia take them back into that deflationary spiral. The way you described it is exactly how we can see it playing out. And I just don't think that, knowing the character of the BOJ, even supposedly the new BOJ, which to me is not massively different from the old BOJ, I think that they're not going to preempt anything. They're actually going to leave decisions until they have no choice.